All right, perfect. So happy Tuesday, everyone, and welcome to our bi-weekly webinar. We are so excited to bring you guys a slightly different pace for today. In addition to Staylist updates, we're expanding our webinars to share broader industry knowledge that every hospitality operator can benefit from. So we're so thrilled to introduce you to our special guest. His name is Tyler Otto, and Tyler is the owner and president of Specialized Accounting, where he partners with hospitality businesses to help strengthen their financial processes and create clarity around numbers, which is something that we all look forward to, right? So he brings a deep understanding of financial strategy, of operational best practices in hospitality, and he works closely with properties and operators to simplify accounting, obviously improve financial visibility, and to obviously make your teams just, make smarter data-driven decisions. So as many of you know, Staylist has been doing a deep focus on enhancing accounting capabilities to deliver one of the most powerful and intuitive accounting solutions in the hospitality industry. So before I hand it over to Tyler, I'm actually going to introduce Clyde Yelverton. He is Staylist's Chief Operating Officer, and he's going to share a little bit about Staylist and how our accounting vision and progress came to be. So Clyde, I'll pass it to you.
Thank you, Courtney. Very excited to have this webinar series with Tyler. I just wanted to share a little bit about how we've gotten to this point as becoming the accounting leader. Staylist, like many software companies, the way we build our software is working with a ton of different customers, building out different accounting processes. You start with one, and then you get to 10, then you get to 100, and you expand on and on from there. And what we found is almost everybody does accounting just a little bit differently. And so what we ended up resulting with, which is what's common in many PMSs, is a lot of different accounting methods and different ways to do accounting. It was software developers building out accounting processes. And so over the past couple of years, we've invested a ton into working with industry experts. We've gone out to find the best, like Tyler. We've worked with Amir Harpaz, which is they call the OG of the RV park industry, but he's also a CPA. He's been helping kind of guide us through this. And we really wanted to peel back the onion to say, what is hospitality best practices and how do we help our customers achieve that? How do we make their lives easier by, cutting through the noise and figuring out what really is best practices in accounting? And where we've landed is we decided to build our system based on an industry framework. So USALI, which is the Unified System of Accounting for the Lodging Industry, is the gold standard for accounting and the way you structure accounting for a hospitality business. And we said, we're going to use that. Oh, we got the USALI book. I also have the USALI book. Thanks for bringing that up,
go
Tyler.
team go.
Some light reading for my daughter, Romy, as we go to sleep at night. But we use that, and also GAAP, which is generally accepted principles for accounting. I probably messed that up, but it's like the standard of the US particularly. And so we build it around industry frameworks, not just on how different people are running their businesses, and for hospitality businesses specifically through USALI. We're now the only PMS partnered with USALI. You can go to the USALI website. We are the only PMS across all of hotels, vacation rentals, RV parks that is certified by USALI as a USALI certified system. And we wanted to launch this webinar series to start to communicate the value to doing that. So there's reasons behind why you would want to run your business on an accrual basis. We get a lot of customers coming in, say, I run my business on cash versus accrual. And we've taken the stance that we only support accrual accounting. And part of today is we're going to explain why and why that's important and how that drives your business and how you can get key insights with an accrual-based system that you can't get otherwise from just purely a cash-based system. And we're also going to go into, over the next course of this series, into running your business and why pulling out key metrics out of your business, like RevPAR, ADR, just aren't possible to get accurate metrics and accurately run your business by using a cash-based system, or even by recognizing revenue in different ways than the way a pure accrual, the correct way to recognize revenue on a daily basis. And lastly, we're just going to kind of demystify what accounting means within a PMS versus what an accounting system is. So we're not trying to replace QuickBooks or Sage or other accounting systems. We're trying to provide the accurate accounting out of our PMS, the way we post a general ledgers and post journal entries within our PMS, so that you can integrate or post to other accounting systems to run your full business that includes other things like expenses and all of your financial aspect of the business to get a full picture of your business. Um, so I just want to share a little bit of context before we jump into that, and we're going to keep investing and keep, pushing to become the leader in accounting. We've made a ton of strides. It's been a lot of fun. We now all love accounting, at least some of us do. But we're really proud of where we're come. And yeah, Nick's shaking his head. Nick gave a speech on accounting, so he's even getting into it. Um, but I want to give a
Reluctant.
lot of thanks to yeah, I want to give a lot of thanks to Tyler for helping him guide us through this process, and also Amir, who's been instrumental in helping guide us through this process. I don't think he's on this call, but I'm sure many of you know him. He's runs a bunch of RV parks, hotels, restaurants. He's been in the hospitality industry a long time and a CPA. So excited where we come and where we continue to kind of push forward. So with all that, I'm gonna toss it over to you, Tyler.
Ooh, fun. All right. Well, thank you for the intro. And for those of you just joining in, yes, as he said, I am Tyler, and my dog just decided to make noise. So I apologize if you hear that. But Golden Doodles will do that. So I apologize if you hear that throughout this meeting. That being said, today we're going to talk about accrual-based accounting. So I'm going to share my screen, and there we go. Hopefully, you all see a slide deck.
We can see
Now,
it.
perfect.
Yes, sir.
Now, main things along the way, I'm going to go over accrual-based accounting, what it is, why it's important, the benefits for you. But a couple things. If you got questions along the way, drop them in that Q&A. Courtney, feel free to throw off my groove at any point. You won't mess with me, or you won't make the presentation any worse than it already is. So feel free to jump in if it seems relevant, and we'll also have time for some questions at the end if it's outside the scope of this presentation. And we will be teasing what's coming up. So a little bit about me. Those that don't know, I am Tyler. As Courtney said, I'm the owner of Specialized Accounting. We're a 15-person accounting firm specializing in the hospitality space. This is all we do: hotels, restaurants, campgrounds, marinas, RV parks. This is where we live and what we love. Also, with that, I have a little bit of sway in the accounting industry. Gusto, one of the biggest payroll providers, I'm on their partner board. Relay Financial, one of the biggest accountant bank, on their advisory board. Spoke at Intuit Connect this year. So the accounting industry, I really love to nerd out and talk about all the systems, integrations, and tools, which is why I love that Staylist is building tools and integrations with some of the key softwares that we use in our space. As far as hospitality background, I cut my teeth with Vail Ski Resorts, working on their lodging side. Ended up with five-star luxury hotels like Montage and Pendry. Ended up with a small asset management firm out of Denver, doing 15 hotels there, that, 2 and 3 star, and really learning the differences between how you can run a 4 or 5 star luxury hotel the same way as a 2 and 3 star, and being able to compare apples to apples. So, and then, all of this funds my desire to buy more and more tools for my wood shop, where I struggle to do anything of value. So, funding and addiction, but there we go. Let's run with the accounting though. Today's agenda, we're going to hit on 3 crucial things. We're going to talk about understanding this accrual world. We're going to figure out how your financials work for you, and how, when you're doing this right, it's more than just a necessary obligation, but actually a tool, an asset, a resource that works for you. And we all love money, so let's talk about the tax impact and how we can save a little, plus teasing what's coming up in the next couple weeks. So, that being said, ask questions along the way. Courtney will interrupt me if it's relevant, and we'll keep rolling. So, first off, I just want to talk through that scenario that we've all seen before, because I want to draw an analogy here. But you have that friend, you have that family member that starts a business, and they're like, oh, my niece, my daughter, she's a whiz on the internet. She created a website for me. I don't need to pay for some fancy firm to do that. And you end up getting some HTML monstrosity that ends up looking like this. I'll be honest, I created this one with AI because I found several examples and felt really bad about showing their exact websites. So I just said, AI, create a version of this for a hotel. But this is pretty spot on to what you can actually find on some real websites, where just we have all seen enough websites to know what a bad website looks like and what a good website looks like. A bad website where, there's not even a contact us form, it's very ugly to look at, very little information, very generic, versus a pretty website. Like, I don't know, Staylist website. I think your guys' is rather quite fetching. Honestly, I think it's better than mine. I need to reach out to you guys to get help on that. We're accountants, okay? We're not designers. But that being said, all of us have seen enough websites to know what is good and bad. Now, unfortunately, most business owners haven't seen enough financial statements for different businesses to instantly look at it and go, oh my gosh, that is atrocious. And knowing what a good set of financials looks like and how they're actually working for you, much like a website that gives you clear instructions, benefits, self-service information. The same thing should be true of your financials. And that's one of the reasons I love Staylist is as an accountant, it makes my job easy to get the information I need to build a pretty set of financials that really leverage the financials, the books, in a way that it's now a tool for the business owner. And so today, one of the first things that we need, we're going to talk about today, is accrual-based accounting. And many of you, you're like, oh, I'm already zoned out, Tyler. I don't care. And it's like, well, okay, let's talk about this because this means money for you. But we need to first explain what accrual accounting is for those of you that have never heard this term, because you have two types of accounting, cash basis and accrual basis. So let's dive into this. And first, just talk about cash. Cash basis, this is easy. This is what all of you, when you opened up that lemonade stand on your street corner 20 years ago, this is exactly what you did. When money went into your bank account, it was revenue. When money left your bank account, it was an expense. So for a hotel, let's say, or an RV park, if you had $485,000 in reservations you took in December for the upcoming summer, well, you had 485 hit your bank account. So that's revenue, right? In December, because that's when it came in. Never mind, those are for May, June, July, August reservations. You had that money come into your bank account. This is a great day. Maybe you even had event revenue where someone's hosting a wedding or something. So you have lots of money coming in. Then, you have a little bit of cash come in from people that show up and book reservations day of. And let's say for that year, you did $650K in income. Then you got expenses. Well, we're only going to expense our contract labor whenever we pay out to those employees. And some of you are already seeing this like, well, is it true? We had no income and no employee expense in March, no contractor expense in June for our people that came on site and did cleanup for us? Like, that already seems weird. Snow removal. Well, we only paid the bill, or we only recognized it when we paid the bill. So maybe this works out for us. Maybe you paid the bill in May, and cash basis, your financials look awful because your snow removal expense would have been zero throughout the year, and then $1,700 in May. That would be odd. Fast forward a little bit more. Let's say some operating supplies, insurance expense. You pay it once a year, and your financials look like this. Where in December of prior year, you're recording $176,000 in income, even though your property is closed because you're snowed in. And then during the months when guests are staying with you, you show very little profit, if any at all, even though this is your peak season when you're fully occupied. This is what cash basis is and why it doesn't tell a good story, because if we put that next to accrual-based accounting, which is you recognize the revenue when you earn it or expenses when you incur it, now we're not going to claim hardly any revenue in December. Maybe you had one or two expense reservations come in, but you're going to recognize that same $656,000 in the month that the revenue came in or that you earned it. So we just shifted the same amount of money to later months. Same thing with contract labor. Let's recognize the expense when the employees actually worked for us. Snow removal, let's do it in the right period. Operating supplies, those shift because here you bought those operating supplies in bulk, where now you're recognizing it as you expense them. And insurance, we're not paying $30,000 in January. We're recognizing that over the 12 months it covers. Perfect. Now we're going to have the same money in, same money out, except $10,000 difference because our insurance kept going for the rest of that year. But now we tell a better story of how profitable we are by month, which during our peak months of May, June, July, that's when we're earning and making profit. And this is super helpful because if we were to put this in a graph format, this is what our financials would look like on cash basis. We would show massive profit in December And then we show a loss all the remaining months, maybe a small one in June, versus a very static and consistent same amount of income when we do it this way and spread it out over accrual. Now imagine showing these cash basis financials to a bank and asking for money, or a lender or a prospective buyer. They're going to be like, what is this? This doesn't even make sense. You were closed in December and you're saying you made 176 grand that month? Yeah, that doesn't make sense. I'm not buying your property. I can't understand it. Versus clean financials that tell a good story. Now, immediately I've lost half the room and you're all like, Tyler, who cares? Like, I know what's going on in my business. It's fine by me. Well, I'll tell you who cares once I finish explaining. It's going to be you. Why? Let's talk about taxes. Everyone's favorite topic. Well, maybe not. Mine, though. That's why I'm a horrible dinner party guest. If we talk about taxes on cash basis, we would recognize, let's say in this scenario, 400,000 in income at the end of 2025, last year. Then you got to pay occupancy tax on that income that you recorded. So at 8%, we're talking 32 grand in taxes. Then we got to pay income tax. The average federal income tax bracket is 15%. Now, I know you're like, Tyler, there is no 15% bracket. I know, because it's a graduated, the average American pays 15%. So let's say if you had no expenses because you just collected this income, you have no expenses to offset it. So you're paying income tax on all of it, not just the profit. That's 92 grand in taxes that you would owe for 2025. Now, take that same 400 grand and let's say you were closed in December when you collected it and you recognize it on accrual basis. We're going to spread that 400 grand out over the quarters that you earned it. And Staylist does this automatically for you, everyone, might I remind you. Now you owe zero occupancy tax in December because you're doing it right. You're paying that sales and occupancy tax on accrual basis. And that same 32 grand is going to get paid out just over later months. And then you don't owe that 60 grand in income tax until next December. Which, would you like to sit on that 60 grand or would you like the IRS to sit on that 60 grand? If we just put that into the market and do the 9 to 10% that the S&P 500 has been doing this year, we're talking about 8 grand in earnings just because you get to sit on that money instead of the IRS because you did your financials accurately. Now, I don't know what a better pitch is for a product than free money, but there you go. Like, manage on an accrual basis. Staylist has got you covered. I mean, Clyde, you look like you're chomping at the bit here. Did you have something?
No, I'm just eating this up. I love it.
Oh, good. That makes me happy. And so, like, if you guys take nothing else from this, you should not be paying sales or income tax at the time the money hits your bank account. If your accountant, if your PMS is not functioning for you this way, you are literally leaving money on the table and letting Uncle Sam sit on those dollars instead of you. And might I say, this is even a bad example because you wouldn't owe that 60 grand in income tax because you would have expenses to offset it in the accrual version. So you'd be paying less when you do it the next year. But if you recognize it all in the earlier year, you're paying that money. So big loss there. Courtney, I'm going to stop for a sec. Any questions so far that feel relevant, or should I keep this party rolling?
Keep it rolling. People are listening and they're engaged. Already
All
asking
right.
if we're going to have a recording of this. So
Okay.
perfect.
All right. We'll run it back later for all of you on a recording. Okay. So then let's also talk about not just the tax side, but what can this do for us just to help us manage our business? Now, spoiler alert, I am not going to go as far down the path that I like to talk about metrics and data in this webinar today because this is a 3-part series. So 2 webinars from now, we will be talking more in detail about all the metrics we love to analyze, but they are only accomplishable, because I think that's a word, with accrual basis. But one big one that's super important just to kind of, as a palate cleanser, to kind of tease your appetite for metrics, is one called working capital. Now, many of you hear metrics like this and you automatically think of like some snooty banker, and I've bored you again. Like, imagine me with a Monopoly monocle at this point, but this is so important that, like, don't write off what feels like super industry jargon accounting terms, because I promise this will make a difference in how you run your business. So, accrual-based financials. As I said, you recognize all that revenue when the money is earned. What happens to that cash then on your financial statements? You show it came into your bank account, and it sits over there on your balance sheet as advanced deposits or unearned revenue. And a lot of you are like, what is even the balance sheet? I just always refer to it as a BS. And you're right, it is total BS for a lot of businesses. But if we get it clean, you can get good information. Basically, your balance sheet shows what you own and what you owe, your assets and your liabilities. And your assets include what's in your bank account. So right here, we're just going to simplify this down and say our current assets in this business we're looking at in September, October, November of last year, they were sitting on 450K in the bank. And then that started to dwindle as they went into their winter season. And then they start getting some extra cash into their bank account. And they're like, woohoo! June, July, August, let's throw a company party. Let's buy that extra truck we were looking at. Let's do lots of fun stuff with our business because we're rolling in the dough. Never mind that quickly depletes coming into the winter season, as we can tell. Now, this doesn't tell all the story for business owners because your balance sheet, if you're doing accrual-based financials, is going to show what you owe. Part of what you owe is that unearned revenue, that money you took from people, but you haven't earned it yet. And you might be like, well, that's my money. I'm not going to refund it. You better believe if your property burns down or if you have a mudslide into your park and people can't access the property, you're going to be refunding that money. So it's not yours until you earn it, which is why we like to put what their liabilities are, aka all that money that they haven't earned yet, right next to their bank accounts. So their assets, what they own versus what they owe other people. And you can see they're sitting with a healthy Staylist green balance here through several months. But then this business, which I took this almost exactly from one of our past clients, they started to get all this money in for weddings coming up that summer. And they actually had more unearned revenue on the balance sheet than they did money in their bank account. Meaning if the property burnt down or if there's a mudslide or like some crazy weird scenario, like let's say a government restriction over a global pandemic went into play, like something absurd we'd never believe happened. They would have to refund money here, and they owe more to people that have given them money than what they actually have in their bank account. That is scary. If we put that together, that's what we call working capital, your assets minus your liabilities, current assets minus current liabilities. And we can see that they went negative 260 grand at one point, spending into money that wasn't theirs yet. Now, luckily, they climbed out of that going into August. As more reservations came in, they earned the revenue, they had the events, they had the weddings there, they earned it. But this impacts how business owners operate because so many business owners would just look at their bank account balance and be like, woohoo, $500,000, let's spend. Or maybe you're a smaller property and you're like, woohoo, 50 grand, let's do a giant employee bonus. No, you want to know what your key cash metrics are. And working capital is just the tip of the iceberg of several other metrics that we're going to explore in a future webinar coming up in 4 weeks, 2 fortnights. Yeah, put that on your calendar, 2 fortnights from now. So accrual accounting, this is only possible if you utilize that format and not cash accounting. Now, I would love to quickly talk about just some common objections we hear from people. And then I want to dive into Staylist and hit any questions you may have as well, but we're going to go straight into the software. So first off, people will often, say, well, that's great, Tyler, for accrual-based accounting, but I file my taxes on cash basis. First off, if you're a hotel, RV park, campground, and you accept a lot of advanced deposits, I would say, why? Because if you're filing taxes on cash basis, you're giving the government money earlier than you do. But fair enough, maybe you're not sitting on a bunch of liabilities and you file your taxes on cash basis. Whoever prepares your taxes, this is an easy exercise for them to take your accrual-based books and prepare them in cash basis. It's a small little box called the M1 reconciliation. If your accountant doesn't do this, go to them and say, fill out the M1. There you go. That's your key term to sound smart. So for all our clients we work with, we manage all the books on accrual basis. It's an accrual world for everyone, and then they can still file taxes on cash basis. Not a problem. Maybe you're like, well, Tyler, that's all well and good, but my books are already on cash, so we can't really switch to accrual. Yes, you can. And you can switch both your tax filing method, or you can just start managing your books on accrual basis, do a true up, and then still keep filing tax on cash basis. Like, this is not a hard switch for any accountant out there. You just got to make the decision and document it. So really easy to do. And again, Staylist is going to give you the reports to get that starting balance right whenever you say, hey, I want to make this change. People will also say like, well, that's really all well and good, Tyler, but like it's too hard for me to track when this $100 comes in that it's actually for, an event in May and this $100 is for an event in June. And no, you don't need to track that. So this is why you have Staylist. It's because it will automatically put those things as deferred revenue to the future and recognize them at the right point. You aren't doing squat, which makes me super happy, right? Accountants, we like the laziest route forward. And so if a system can do it for us, great. And then lastly, is this easy to do in Staylist? And you know what? Let's just share my screen. Let's just do this live. Because if we're in Staylist, you're on your home screen, you can come in here to settings. And on this marketplace, if you have QuickBooks Online, QuickBooks Desktop, look at this. I mean, who doesn't love that price of free 99? One of my favorite prices. They'll help you get these integrations set up and syncing over. And a lot of you may like, well, Tyler, that's good, but we have the issue of it wants some sort of GL mapping. And if that's the case, Staylist has a nice, easy way for you to come in and set up all your products, all your payment methods, all your tax rates, and you'll be able to select where these go. It's a little bit of work, but Staylist support is here to help. It's really not that complicated, and they make it easy for you. So, Clyde, or Nick or Courtney, I mean, anything I missed on this that you feel like you want to touch on further?
The one thing here that we see is the importance of setting up your chart of accounts optimally to run your business and not just trying to create a bunch of general ledger accounts to map into Staylist. So, Tyler, can you touch on a little bit of what's important to keep in your chart of accounts versus what's important to report and keep in your Staylist and your property management system?
Yeah, that's a great question. So, as far as your property management system, your PMS is not your accounting software because all it's going to focus on is revenue. It's all about the top part of the P&L, which is a really important thing. You can't have profit without revenue. So Staylist is going to help you manage all of that. Now, maybe you have a golf cart you rent out to guests and they can book a 1 hour, a 2 hour, a 5 hour. Maybe you have early check-in, late checkout, pet fees, extra rollaway cots. You have 7 different candy bars that you decide to set up as products in Staylist. You do not need general ledger accounts for each of those items. You want to be able to summarize and say, hey, we did $100 in snacks, right? Maybe that's the account level that you want. Now, we have certain terms in USALI, our favorite book that we like to hopefully show you. But we have certain terms in USALI that we like to use, but you don't need every single candy bar broken out on your chart of accounts. You just need a snacks item. For rooms, a lot of times business owners will say, well, I'm going to have an account, a separate account on my general ledger for site number 1, RV pad number 2, RV pad number 3, RV pad number 4. And you don't need that. You just need RV site income to track what am I selling in RV sites? What am I selling in campsites? What am I selling in lodging? Maybe you have cabins or hotel. And additionally, USALI likes to break it out up to very different levels where sometimes you track just transient income and sometimes you track group income because those are the 2 biggest drivers of success is what are you getting in group and transient. And it doesn't really matter beyond that. Did I fill cabin number 3, cabin number 4? We don't want to see that on the financials. You can always go into Staylist and see how well a room is booking. Your financials should be consolidated, and that will map perfectly to your accounting software. Clyde, I'll even go one step further to answer the question that I think you asked and I just didn't fully explain. But your accounting software is going to be completely different than Staylist. Staylist is the revenue side. You're going to have QuickBooks, Sage, Xero, NetSuite, Dynamics, like you name it, you can have the accounting system behind it. I like QuickBooks, not because I like Intuit. In fact, I have a deep, fiery hatred for them. But for the price point, they are the best system out there. I'm not saying they're the best system. Hear me. For the price point, they are the best system out there for what you can do and offer. And then with Staylist integration, they just make it easy. So I will be quiet, Clyde, for another question.
Maybe to expand upon that, can you talk a little bit about how to best leverage or utilize USALI and the chart of accounts that USALI produces? It's extremely lengthy. So how should an operator look at that chart of accounts? Where do they need to go to get the chart of accounts? And then what should they do with the chart of accounts to bring that into their business, or at least bring some best practices into their business?
Yes. So Usali is a beast. And if you utilize everything in their chart of account structure, I mean, they build it for the five-star luxury hotel if you want. So you could have a spa, three restaurants on property, a retail store, an activity center, a golf course. You don't need all of that if you're just an RV resort with maybe a stand-up paddleboard operation at your local pond. So figuring out what's going to be helpful for you, you can always go to HFTP, Hotel Finance Technology Partners, hftp.org, get a copy of Usali. You can reach out to our firm. We set up all our clients on Usali. It's a bit of a beefy process to implement, but we have our templates that we can upload into QuickBooks and get everything set up depending on the operations. We even got some YouTube videos coming out here shortly just on the highlights. But the main thing is looking through the desired chart of accounts and figuring out what actually is helpful for you. Some operations, they have a separate front desk staff from the manager, from housekeeping, from linen room attendant, and other ones, it's just one person on site. You don't need four separate labor accounts. So breaking down the chart of accounts into segments that will help you make strategic decisions is the name of the game. Not overdoing it, but also, if you make $50 a month in cancellation fees, or maybe some pet fee for $50, you don't need a separate line for each $50 one if that's it. But if you're doing 10,000 a month in a certain line item, yes, break it out. So it's having that knowledge and working with a professional can sometimes be helpful to triage what you need.
I think that'll really start to be highlighted next session. Did you call
Yes.
it a fortnight? The next fortnight, when we start talking about metrics and KPI and some of the reporting. I know that your firm does. I believe you use reach reporting, but looking at some dashboards and running your total business, it's essential to have your chart of accounts set up correctly and your revenue reporting accurately. Oh, we got a new share screen um, to do that.
Yes. And speaking of what you just said, what's coming up, I did want to highlight so that everyone knows what we're hitting in the future and then opening up for any more questions. But as Courtney has sent out on every social media platform, it seems, we're going to talk next session in a fortnight. Man, I just love that word. I don't use it enough. We're going to talk about tax strategies as far as beyond just revenue. But on February 10th, we're going to go through what sort of entity should you select. Should you be a partnership, a sole proprietor, an S corporation, a C corporation? What makes sense depending on your specific situation? We're going to talk about, can you pay your kids or family members to get favorable tax treatment? A lot of campgrounds, RV resorts, small hotels, they start out as a family business. Well, let's get that money out of the parents' tax bracket and into the tax bracket of the kids, which my 9-year-old right now, his tax bracket is zero. So every dollar I pay to him goes out tax free. That's awesome. Get it out of my tax bracket. We're going to talk about things like cost segregation studies and playing depreciation games. Many of you, your eyes probably glazed over when we say the word depreciation, but this is magic when you start doing the right things that you can, on paper, show a loss and have no taxable income, but your bank account shows lots of money in. It's a magic world, and it all comes from playing these fun games. And then, somehow I lost my cursor and it's going backwards. There we go. Oh, and there will also be 2 dad jokes on that one, apparently. So, and then Clyde's satisfied. And then 2 weeks after that, we're going to talk about metrics that matter. And that's where we're going to go deeper into things like cost per occupied room, labor margins, analyzing discount margins, cash health metrics beyond just working capital, but current ratios, quick ratios, really just making sure that your business is in a healthy spot. And oh yeah, and I probably will reference at least 3 80s movies in that one. So, you got to have your skill set. I'll finish this with just saying I asked AI for an intro to this, and AI knows me so well. This is what it came up with. Great shout out to Sarah Michelle Gellar and Reese Witherspoon. It's almost just like the cover of that movie. But that's what I got for you today. Clyde, Courtney, any other questions?
Yeah, we have some questions in the chat, and just keep that up in case anybody wants to write down your email.
Perfect.
So one of them Clyde answered, but it was about covering ADR and RevPAR, which is going to be in our third webinar. So
Yep.
on the 24th of February, you guys can do a little bit more deep dive into that and ask Tyler some questions there because we have all those new reportings that I know that a lot of you have questions about. So he'll be able to answer those from the ground up.
Yes, ma'am.
One question, I believe it was earlier when you were talking about taxes. It says in
Mhm.
a pass through entity, you need to pay estimated taxes each quarter. More like a
So
statement.
it is a statement, but there's also a fun little loop here hole here. Because in that example I showed that you had all this income in December, and then you had nothing paid out throughout the year. Well, the rule by the IRS is you owe at least 100% of what you owed last year or 90% of what you're going to owe this year. So if it's your first year in business, you can actually get away without penalties and interest that first year in operating, or if you grew from prior years. So yes, I oversimplified, and there's actually even more nuances I left out because I didn't want to put y'all to sleep. But you're right. Like, part of a good tax plan is knowing what your estimated taxes are, and are we needing to owe more this year? Are we needing to owe less? Is there some things we can play? I've even had some clients where it's like, ooh, well, I owe the IRS 60 grand in estimated, but I've also got this potential investment opportunity that's going to pay out 15%. It's like, well, the penalties are only going to be around 6% and you're going to make 15. Maybe you take the penalties and interest. All part of a good tax plan to really think like, should I take the hit from the IRS or not?
Awesome. The next question is what to say when our accountant says that it will show a big loss for the first year if we switch to accrual.
Well, it depends because if you if you are sitting on a lot of advanced deposits, it can actually help. Like, this is where you run the projections because your accountant may be right or they're totally missing the mark on what they can adjust. This is where I would say, cool, show me the projection. Like, what are we having to pull from the P&L and put down there? Usually the switch from cash to accrual is you're taking all this cash you recognized already and then throwing it to the balance sheet, and you actually get to take that as a deduction and it helps you out. So I'm curious how they're building out this projection. I wouldn't recommend the change though if you're not sitting on a lot of advanced deposits in general.
Awesome. Thank you. The last question that we have in the chat right now is can monthly slash extended stays be mapped separately than transient sites? For sales, I'll let you answer that one first. Well, let me just finish.
Hit the
For
whole question.
sales,
This is good.
for sales slash occupancy tax in our state, monthly slash extended stays are exempt, but it would be nice to track.
I might kick to Clyde or Nick if they can answer this one, because you are correct. For those of you that don't know, most states have if it's a long-term stay, it is exempt from occupancy tax, which is awesome. We have that here in the state of Utah where I'm at. As far as the mapping, this is where I might even need to make sure with Nick or Clyde, because I believe you could probably create a separate product or item and then map that item to a different chart of account level, correct?
Yes, you
So
can. Are you gonna take it, Courtney?
I'll let you talk about the accounting side of it, if you want to do that. But I know from the property that I used to manage, the long-term and transient stays, you're still taking that money in as site revenue, right? So when it goes to tax exempt, it's just the way that you have your accountant or how you're going to just like receive that money in. So Clyde, if you want to talk about it from a tax perspective of it, but it's still going to be considered earned revenue for your transient stays because technically it's still transient. It's just exempt. So South Carolina has a 90 plus day tax exemption. If you stay over 90 days, you don't have to pay tax on those sites. And so if we used to refund them back that money, but with Staylist, you can actually turn it off. So I'll pass it to Clyde and I'll let him kind of deep dive a little bit more.
Yeah, and then Mir just jumped in too. But basically, when you set up the system, and we'll set up an implementation, we've just middle launching a new recurring long-term module. But when you set up your units and your rates, you map them differently, and you can set up custom tax codes for each. And I think part of it is your GL mapping. So when you're setting up your chart of accounts, having transient and long-term income, and that's part of the mapping process. And like Amir's saying, long-term, like the way revenue is recognized is different. So with short-term stays, transient, it's recognized on a daily basis. And then with long-term, it's recognized on one day. There's some nuance, like the way it's prorated based on when you book it for each month. But yes, we have happy to deep dive on how we handle long-term accounting. First transient. I have some questions, Tyler. I'm just going to start firing away. I think
Do
we're
it.
done with our Q&A, and everyone feel free to just keep jumping in. But I've got some questions I would like Tyler to answer live,
All right.
because I know you can, because we've talked about them.
Okay.
Um, so one is, what are some hospitality business processes or business practices that setting up your account with using Usally or setting up your financials using Usally, what are you enabled to do, perform new business processes? For example, the night audit. Can you talk through that process and the way Usally handles that? What you've
Yeah.
learned from all your experience, all these other properties you manage, and also specifically for RV parks that maybe don't have a full-time night auditor on staff, how to think about some of that and how to leverage Usally best practices.
Yeah. So this is a great question. I love the word night audit because many people get scared off by it. So first of all, for those of you who don't know, the night audit is essentially a process going all the way back to when hotels needed someone to do accounting work every night because they didn't have a solid PMS in place because there weren't cloud PMS systems. And I mean, it was even a decade ago I was doing this manually within hotels. The purpose of the night audit, which I absolutely love in the modern day PMS, is to make sure that all reservations are closed out accurately, and we've kind of certified the books up until a certain point. So when you close out a period and run the night audit, we're essentially saying, cool, everything up until this point is accurate. I can tell you, I have worked in, you probably name a PMS in the hotel space, I have worked with it. And there are some where they'll still allow any user at the front desk to go in and just say, oh, by the way, there was like a revenue transaction we missed in February of 2023. I'm just going to go add that right now. And now everything downwind of that, maybe guest ledger, advanced deposits, is now wrong, does not match the books because it didn't lock you out of this prior period. And this is where I love Usali in the night audit, because once you certify and close out a period, you're saying those are locked, those are done. We're not going to make changes, because if those changes get made, they won't show up in QuickBooks or the financial software. That information has already been synced over. So once we have the financials accurate, we're going to touch on a lot of these in the metrics session, but allowing us to look at things like cost per occupied room. Usali's really big on breaking down expenses by the right department and knowing what those variable expenses are. And so being able to see what is our cost per occupied room, how much does it cost to put a head in a bed or turn that room for a night, allows us to start seeing like, ooh, is something going haywire? Do I have housekeepers that are, taking longer breaks in between rooms and just sitting in an alley of the business playing Candy Crush? Like, we actually had that exact scenario once. I don't know if they were playing Candy Crush, but literally they went to the security footage after seeing CPOR going up, cost per occupied room going up, and realized, oh, that's what's going wrong. So it allows you to kind of keep an eye on those key metrics where you would say like, oh, normally room nights are going up, so labor must go up, but it shouldn't go up disproportionately as a dollar. Same thing with average daily rate, or if we look at profit per room, or even if we start getting to like you have a restaurant or a food and beverage component, looking at costs of goods sold margins, looking at retail margins. And then it allows you to compare your resort, your hotel, your campground to other similar ones that are also on Usali and seeing how you're doing as an industry standard. And so that's where I love, like, Usali is great because it allows us to compare the $500,000 a year RV resort to the 20 million a year massive hotel. It makes them apples to apples, even though they're completely different beasts.
Awesome. So another thing we get is, hey, that's great. You're an accrual-based system. we'll run our business on accrual, but our CPA is filing our taxes on a cash basis.
Yep.
And we need to look at our deposits that are in our bank account and say, where did these deposits come from? How much came from rent? How much came from point of sale throughout the whole process? What's your combat to that and how they should be running their business and what should be their daily business processes with reconciling their deposits?
Yeah, because if you have that weird scenario where you manage the books on accrual, you're on cash basis, yes, you have that adjustment. Now, here's where some of you are going to like this answer, some of you are going to hate this answer. First off, it's not the hardest thing to do to go run a report of deposits, put in an Excel spreadsheet, and just say, okay, for these few deposits that cross the period, what's the revenue? It's not the end of the world, and anyone that's decent in Excel can do this. The other question I have, though, is for a lot of businesses, we have what's called a materiality threshold. And I know some of you are going to hate this answer, but the IRS even talks and GAAP talks about only doing things that materially impact a reasonable person's perception of the business. And if you're not shorting the IRS of income, it doesn't really matter. And so if you've got $4,000 that cross that period, it's honestly not worth your time to even break it out. And that is part of GAAP and even IRS considerations is if it's an immaterial amount, which on a $2 million hotel, a $4,000 adjustment, the IRS isn't going to care. But that being said, yes, you would need to run your deposit reports for all those things that are received now and allocate the revenue by location. A competent accountant should be able to do that in about 45 minutes. So, if your tax preparer is scared by that, first ask yourself, does your tax preparer send you paper documents to fill out and ask you send in the shoebox of receipts? Tells me they're not using tools to do this rather quicker and easily than could be done. Good question, Clyde. But everyone going back to that, the M1 reconciliation, that's what your accountant needs to fill out. Little box on the form. It's an easy one.
So what you're saying is if they're not getting what they need, they should reach out to Tyler at Specialized to get the services.
I'm not going to be as shameless as to throw that out there, but specializedat.com.
Well,
But
yeah.
they could. Yeah.
Awesome. So another question, you touched on this earlier, but this is something we get all the time. It's okay, I'm sold. We've been running on a cash basis for 50 years, but we want to change.
Yep.
What do we need to be thinking about as an operator to navigate that change? Like when should we do it? Who should we contact? What considerations? I know it's a large process, and I think you mentioned you would have a multi-day training process for accountants to teach them how to do that. But let's break it down into I'm an operator, I'm an owner. How do I need to
Yeah.
think about that and approach it?
Okay. So there's, like everything, there's always a cost to change. And you are going to see the tax savings again if you're sitting on a lot of advanced deposits and you want to switch to accrual on the tax side or even the accounting side. First up, pick the date. What date do you want to make this change? Now, if you're changing your tax filing method from cash to accrual, yeah, there's a tax form that needs to be filled out. 3112. I'm panicking in front of you all, and I actually don't remember the last digit. 311 something. Change in accounting method form. And essentially, for an operator, you need to, that's your accountant's job to figure out. You need to be thinking about what information am I getting from my financials that are going to help me? Because if I start managing on accrual basis this year, my year over year comparables, if I always look at how I'm doing compared to last year and how I'm doing compared to the year before that, it's rather garbage information because all the revenue is hitting in a different time period. So do you want to pay the expense for someone on your team or an accountant to go back and also change last year? So now you're looking at comparable year over year data. Do you want to just rip the Band-Aid off and say, okay, 1/1/2026, we're going to go accrual, and we know that last year's data is not helpful from a comparison standpoint? My opinion, if money's tight, I would pull the Band-Aid off and just know year one's going to be a little bit squirrely. But if you were in Staylist this whole time, doesn't matter. You can manage your revenue compared to prior years super easy. It's just the expense side. If I have the money and I really want to understand my business, or I'm looking to sell in the next few years, I would have an accountant go back and fix last year so that it's also apples to apples on accrual basis. And now I've got good comparison data and good historical financials to show a prospective lender, buyer, investor, any of those things.
Awesome. Um, my last question, this is a bit of a Staylist plug, but
Do it.
it's about processor reconciliation. We kind of touched on this earlier, but can you talk me through the process you go through as an outsourced accountant reconciling the books of the processor to the bank statement and even doing a three-way match between the bank, the processing statements, and the PMS,
Yep.
and how the reconciliation dashboard within Staylist can help expedite that process?
Okay. So this is a huge pain point. I'll be honest, guys. When so my accounting firm works with tons of PMSs, tons of them. And when we're politely talking to people in conversation, we're like, "Oh, what PMS do you use?" And they're like, "This one, that one." I'm like, in the back of my head, I'm like, "Yeah, I'm gonna add a pain in the butt fee because that software is awful to reconcile and track down payments and make sure everything comes through, and they have errors." And then if I hear Staylist, I like message my team and like, "Ooh, it's a Staylist client, guys." Because like it makes it that darn easy. So what Clyde is asking is you accept all these payments from credit card, your Amex, your MasterCard, cash, ACH, Venmo, you barter via carrier pigeon. I don't know, but you have all your different payment methods. Credit cards are historically known to be difficult because they might deposit in your bank account $1,000 today, but Staylist wouldn't do this, but the PMS would say, "Oh, you collected $1,200," and it might be because Discover and Amex took 2 days to deposit, but Visa took 1 day, and so none of your revenue recorded in the PMS ties out to what hit your bank account, and you're trying to make sure you got it all. And this is why I love Staylist because they brought up the question early on of like, well, doesn't everyone in the industry, can't we do that? And I remember Amir and I both saying, like, no, this is the biggest win is to make what hits the bank account perfectly match what is in Staylist report. And they said, hey, we're going to take the high road and build this to the highest level of customer service. So, Clyde, you asked the question of what does your reconciliation dashboard do for you? As an accountant, I hate to say the answer is you do it so well hitting the bank feed that I don't even need your dashboard because it perfectly matches on the bank statement. It's so good. But if I need to cover my butt and provide audit level material, the reconciliation dashboard is going to show exactly penny for penny those things matching. But your QuickBooks integration and your postings automatically do the work for me. So yeah, you almost worked yourself out of a need for that reconciliation dashboard if you don't want to.
Thank you. I can't take the credit. Got to give the credit to the dev team, but
Way
I'll
to go, Vlad.
represent them. Um, I think one thing, a big thing with the reconciliation dashboard that is important still is, as can get exposed in the night audit process. Sometimes like you can have a cutoff time, and we've had this issue with other processors where Stripe's the processor of choice we've decided to move forward with for a number of reasons. One of them's the accuracy and the batch timing. And we've had other processors in the past, and maybe Stripe does it randomly too, where there's a batch time and a transaction's supposed to be in one batch, but and really it's in the batch the following day. And so a big value in the Staylist reconciliation dashboard is it doesn't really matter what time your batch is or when the cutoff is supposed to be. You can always see all of your transactions that are supposed to be in one batch, and you can add up everything to say, okay, this is supposed to go in that deposit. I see that that one transaction was in the following day. So you're not always looking back to say, okay, it was off by 35,000 or $3,500 this day, $2,200 this day. And so you're like, was it the day before in this? Was it the day after? And it's always confusing and you can basically never catch up. This gives the full end-to-end timeline view of how you're able to close that out and close it on a daily, monthly basis.
And what I will say to that all too is like the reason I also love your software is for us, we always want to reconcile to the bank accounts, to the credit card clearing. We also want to be able to tie out to advanced deposits and guest ledger. And the thing is because you guys reconcile that timely and you post the accurate entries, yeah, the guest ledger, city ledger is always going to tie out to your reports. And that's what we go verify every month. Same with advanced deposits. I mean, the reporting's just so clean and pretty. I love it.
Yeah. Um, Mary said you run into this problem. Reach out to Courtney. We can walk you through the reconciliation dashboard, make sure we're all set there and good to go. Um, Amir commented about the guest ledger report. Um, I know we're running close on time. Maybe we could touch on that. I don't know if we want to demo it in a future session as well. Tyler kind of talked on. Do you want to just talk about the guest ledger or the night audit process and what the guest ledger report is, Tyler, real briefly?
Yeah. So real quick, the guest ledger. Think of it as a glorified bar tab, right? Like customers coming in, they stay one night for $100, second night for $100, third night for $100. Their bar tab has grown to $300. And when you run the report for those 3 days, you want to see you earn 300 in revenue, but where is it sitting? Well, you never actually got the cash yet. It's sitting on the guest ledger, waiting to be received from the guest. So the guest ledger can grow and be massive. We've had some clients come to us where the guest ledger becomes this out of control beast, maybe because the front desk manager keeps retroactively adding pet fees after someone leaves, but they never collect. And you just slowly have this growing balance forever of, an unwieldy guest ledger that you might never collect. And so Staylist, making it easy, always tying to the financials so that operators can go in and see, hey, what money do I still have out there on the street that I need to collect, whether in the guest ledger or city ledger, is huge to make sure you get paid, because a lot of times front desk staff might miss that little element of collecting the money. So good question.
Great. I think we answered the question. I commented to Casey the request for custom batch timing. We just very recently negotiated a new deal with Stripe. So that should part of that is custom batch timing. Our reconciliation dashboard should resolve kind of the core issue there, but we still can select custom batch timing. So Courtney will talk with you, Casey. I know y'all are close. Do we have any other questions in the next couple minutes? Courtney, Tyler, words of wisdom?
Don't sweat the petty things and don't pet the sweaty things.
Ooh.
There you go.
Well, what I will do is I will close us out. So thank you guys so much. And Tyler, thank you for your time. As he mentioned, we are going to have 2 more webinar series on accounting. And so you guys will receive an email about all of that. And then you will also get an email for this recording. So if you guys need to send it to your CPA or you need to send it to, one of your owners or managers, feel free to do so. We're always here to answer your questions and provide you the best knowledge for the hospitality industry. And with, people like Tyler who are specialists in that field. So thank you guys so much and happy Tuesday. Have a good day.
Thanks, everyone.
Thank you,
Thanks, Al.
everybody.